Hey everybody, hope everyone's doing well. This is the Emini overview for Tuesday, September 3rd, 2024. And today it's the first trading day of the month, so we can start with the monthly chart. I did touch on the monthly chart in the last video, so it's basically the same idea. Market, we're in a rally, leg one, pullback, leg two, and this rally subdivided into three pushes. So we're in late leg territory up here. Here's the month of August. It's a big bull reversal bar with a big tail and small body. And that's a high one buy, but like I said, it might be late in a rally. Two big legs up and three smaller legs up, and the high one signal bar is a big bar. And the problem with that for the bulls is the trader's equation. If a bull is buying above the August monthly bar, here's their 1-to-1 all the way up here, well past 6,000. And you look at the distance that the market sold off from the high of July to the low of August, and you wonder, is it really 60% that the market is going up here before down here? It's not 60%. And because of that, you cannot take this trade for a 1-to-1 scalp. If you are buying here, you need to be swinging, but the reality is the market's probably going lower fairly soon. So traders are more likely looking to sell in this area than buy. And then for the weekly chart, it's the same idea. So coming into the week, we have this rally, but big down, big up. The bears want a major trend reversal. Here's a bull trend line break, retest of the bull trend extreme, and then an outside bar last week, and it's a high one at the top of the trading range. The market is back in an area where traders were trapped to the left. Bulls were disappointed. Bears, if they missed the sell-off, they're looking to sell the retest. So bulls and bears are probably looking to sell in this area. Outside bar, it's a trading range bar, expanding triangle within an overall trading range. And if you're buying here, you're buying high in the range. And then for the daily chart, same thing, big down, big up. The market's in a trading range. This rally was strong, but it's consecutive buy climaxes. Buy climax, pause, buy climax, pause, all the way up. And then we've been mostly sideways here for about 8 or 10 bars. And the market is back in breakout mode. And it's in a tight trading range here, but overall the market's in a more broad trading range here. And we're in the upper third of that broad trading range. There's an increased chance that if we go any higher, the upside is limited and there's sellers above, because we'd be high in this trading range and in the overall trading range. But if we do go below the tight trading range low, there's probably buyers below. The market's been above the moving average for more than 10 bars. This rally was strong enough for a second leg. Was this the second leg? I don't know. This could be part of the bull flag. Maybe we pull back further and then get a second leg to the upside. And just one other thing I found interesting about the daily chart after seeing how today panned out. It reminded me of a day on the 5-minute, and I made a note of it so I didn't have to waste time looking for it. If you look at the open of the day, July 26th this year, you can see the similarities between the two charts. Here's the daily chart as of today. Here's the 5-minute chart from July 26th. You can see expanding triangle, 1, 2, 3 legs down. Each leg is getting incrementally larger than the last. And it's the same idea here, 1, 2, 3, expanding triangle. Higher highs, lower lows in both cases. And even in both cases, we had this rally and then the expanding triangle, possible bull flag. Over here, we gapped up. Functionally, it's the same as a breakout or a spike. So we gapped up, expanding triangle, and we can see what ended up happening on this day. The market ended up rallying. Also very similar. This bar is the first close below the moving average in several bars, maybe 10 or 12 bars, just like over here. But that gets into expectations for tomorrow, and I'll save that for the end. So for today, coming into the day, we had a big gap down and a couple of bear bars on the open. It's not as strong as the bears would have liked. Bar 1's a trading range bar. Bar 2, prominent tail below, but big gap down and a pair of bear bars. It's probably always in short. Nothing for the bulls to buy. The problem for the bears is that you're so far below the average price, the 20 EMA, which is one measure of average. You're so far below the average price that if you're selling way down here, you want to see above average bearishness. And so far, a trading range bar and a bar with buyers into the close is probably not sufficient. And we go lower at this point. It's a micro channel. It's a tight, well, technically it's a spike on this time frame. There's been no pullbacks. And then you can see we sold off, paused on 3, sold off, paused on 6, sold off again on 7. 7, it's a possible sell vacuum testing yesterday's low and a parabolic wedge. The expectation is a minor reversal. We could come up and test the high of bar 7. Maybe we'll test the low of bar 5 or 6. There's an open gap. And at this point for the bears, like I said, it's a parabolic wedge, and that's a breakout on a higher time frame. If you look at the 15-minute chart up to bar 9, it's just 3 bear bars, especially a strong third bar where it opened at the open of bar 7, closed on the close of 9. So we have a bear spike. This is still a micro channel, so it's a 9-bar bear micro channel. The odds are the first reversal will fail. Again, the expectation after a parabolic wedge is a minor reversal and then at least another leg down. But at this point, we have a bear spike. You can call it a tight bear channel. We're getting pauses along the way, but there's no reason to buy at this point. There's just not enough buying pressure. It's good for the bulls, bar 6, bar 10, a couple of bull bars closing near their highs. But just look at the chart, and you can see even limit order bulls are not making money. And then we had this small pullback to bar 12, 3 bull bars, good for the bulls, but was there a significant trend line break? Not really. Here's the trend line. 12 is testing the trend line, but at this point it's still more likely a minor reversal. Also, bar 8, this could be the most recent major lower high. And until the bulls get above the most recent major lower high, the market is still more likely in a bear trend. If it does get above the most recent major lower high, then you could argue it's either a bull trend or a trading range. Some traders will even consider the high of bar 7 the most recent major lower high. This might be more minor. But in any case, you can see the bears prevented the market from getting above that price. We're continuing lower. Bear breakout, inside bar, and bear bar. So this is actually follow through, even though it's not very strong. And then another breakout on bar 16 with minimum follow through. The bears were able to prevent a bull body, but you can see the bears actually did close one tick below the low of bar 16 on 17. That's good for the bears. Also, I may have mentioned this earlier, the bears at this point have open gaps, and that's good for the bears. This is so far a small pullback trend. There's actually no technical pullback until bar 11. And if a bull bought below bar 3, 6, even bar 8, if you bought below 8, then you finally, as a bull, were able to make money. But before that, you're trapped all the way down. This is a tight bear channel. So in general, you only want to look to be selling. There's not enough buying pressure. There's no major trend reversal. For the bulls, if the bulls are looking to buy, especially for a swing, they need to see a strong trendline break, preferably with a close above the moving average, even a bar completely above the moving average, breaking the bear trend line, and then a retest of the bear trend's extreme, the low of the bear trend, and only then you can look for a major reversal. But we don't have any of that at this point. This is just a really strong, tight bear channel. And then 18, it's a sell reversal bar. The bar closed below its midpoint, but it has a bull body. It's a weak low one. A couple of different ways you can look at the leg count here. Maybe leg 1 from bar 1 to bar 5, and then a fairly significant pause on bar 6, another leg down from 7 to 9, another significant pause, an actual pullback, and then a third leg down to bar 17. So the market has had 3 pushes down. So as I was saying on bar 7, parabolic wedge, expecting a minor reversal. You can say the same here. Now bar 18 is a weak low 1, probably buyers below. And then we went outside up 19, and we went a little higher to bar 21, but 21, look at 20 and 21 for the bulls. Micro double bottom, bar 17 and 19, and then a good bar for the bulls on 19, but then weak follow through, and then an inside bar. So the market's contracting. It's more of a trading range over the past few bars, maybe big down, big up. If anything, it's either a trading range or still a bear trend. In any case, this rally for the bulls is strong enough for a second leg, and there's probably buyers below bar 21. 3-bar micro channel. It's a weak stop order, sell signal bar, but also look where the market's testing. Bar 12 was a weak low 1 signal bar, but it got good follow through. Traders were trapped. So on a retest of that price, you can see what happened on bar 20. We tested that price, and traders sold. Bulls who bought scaled in lower, they're exiting longs. Bears who missed the sell, they're also selling to get short for a second leg down. So again, remember, we're expecting a minor reversal here, 10 bars and 2 legs. So far we have 1 leg and maybe 5 bars, pulling back with an outside bar, but we're expecting the first attempt of trend resumption to the downside to fail because this breakout, the bull breakout, was strong enough for a second leg. And then there's our second leg to bar 26. Now we have 2 legs up, about 10 bars, and we're testing the moving average. 26 is a low 2 signal bar testing the moving average in a bear trend. It's a credible stop order sell. If bulls were buying, hoping for a reversal, they'll allow the market to go against them 1 time here, but not 2 times here. And you can argue it went against them here, but more minor. You can call 21 a low 1, 24 the low 2, and 26 the low 3. Doesn't really matter what you call it, but what's important is you understand what the market's doing. We broke out, we're testing a breakout point, and the breakout point became resistance, and now we have a sell set up in a bear trend. Compare the rally here to the sell-off here. You know this is minor and probably not going to reverse this. And so the danger for the bulls, the bear trend is still intact. We can get a measured move down of this bear flag. And then a good entry bar on the low 2, 27. And you can see we drifted sideways to down, but what's good for the bears is most of the bars today, pretty much all the bars today, have been below the moving average with a small tail above the moving average on 34. So let me touch on 33. What about buying above 33? Bear trend, trend line break. Is this a higher low, major trend reversal? It might be. And this is actually an example. I had a question about this, about stop orders. Bar 33 is an example of a stop order that Al might mark on the chart, even if you end up seeing that it fails. He'll mark this because traders will take the buy and they'll say, okay, bear trend, trend line break. Really not ideal because Ideally, the trend line break would be bigger. Like I said earlier, the bulls would get the market above the moving average, and then on the retest, the bulls buy for a major reversal. But here, maybe there's enough bars for a major reversal, but strong trendline breaks with surges in momentum are better than when the market just drifts more sideways. But in any case, this could be, or you could argue this is, a higher low major trend reversal setup for the bulls. Bear trend, trendline break, retest, plus the retest, we're getting a wedge, 3 pushes down, and then a good signal bar, 33. 33 is a bar that if you're a bear, it's reasonable to get out of shorts above 33 and bulls can buy. But if you're a bull, you want your entry bar to be like bar 19. You want a bar breaking out, closing above the moving average, trapping traders, trapping bears into losing shorts, trapping bulls out, and they're forced to chase the market. And that's your entry bar. And that's fairly disappointing. And 34 might be enough to conclude that your premise is no longer valid. You're hoping for a major reversal, but the reality is the market might be still in a bear trend where rallies to the moving average are getting sold. So you're disappointed as a bull, you buy, disappointing entry bar, you might just exit on the close of 34, and it looks like that's what happened on 35. And then we had this micro channel for the bears, and it might be low in the range. You can see a lot of overlap here, but what the bears still have is lower highs and lower lows. So we're still in a bear channel. Now we have a micro channel. The odds are the first reversal attempt will fail. So even though 43 is a good looking bull bar, micro double bottom with 40, the upside's probably limited. Decent breakout, strong enough for a second leg up, probably buyers below, but the bulls buying are buying for scalps. And then a sell vacuum, 45, but a bad stop order sell below 44. Probably at least come back and test the low of bar 44. And then you can see we got another leg up, 46, 47. So what about buying 47? Or what about even buying here for the major reversal? Bear trend, trend line break, retest. Now we have a lower low, major trend reversal. And there's 3 pushes down, double bottom, nested, and a good signal bar. It's kind of the same idea with 33. You can buy, and you did get a good entry bar, but then you want the next bar to be sort of a duplicate bar. You want 48 to look like 47, and that's what you get on 48. So that's your disappointment. Also think about it. This is the first close above the moving average all day. We've been in a pretty strong bear trend. So traders are probably going to sell the first close above the moving average. And then if you did buy, if you bought here or here as a bull, 48 is disappointing. You might give up on the close of 48. Your premise may no longer be valid. If you're buying a rally in a bear trend, and that's exactly where traders sell. Bulls who bought lower, they're scalping out, and bears are selling rallies to get in at a discount. And everybody sells 49. And you can see here, the market is largely sideways, but I did say we're still getting lower lows and lower highs. And what about buying 53? Is it a final flag? Maybe it's a late bear breakout, a couple of inside bars. It might be, but when we judge or compare the selling pressure to the buying pressure today, it's clear we have more bear bars, more strong bear bars than strong bull bars. We've had only 2 closes above the moving average all day. The odds that this is the bottom of a trading range is probably 50% at best, if that. And these are weak stop order signal bars, probably sellers above 53. And then almost outside down 54, getting a bear breakout, possibly trend resumption, and then more of a breakout 55. 55 is either a measuring gap or an exhaustion gap. Now 55, it's not the biggest bar in the trend, and that's good for the bears. If it was bigger than bar 7, that would be a problem. More likely exhaustion. But at this point, this may more likely be a measuring gap. So here's the most recent bear leg. Here's the breakout point, the 51 low. We're breaking out 54, 55. We're already almost at this target. Probably going to get there. And if we do, we can then just keep increasing the target as the market goes along. So bear breakout, follow through, more follow through, probably going lower, but may have to pull back first. Most breakouts pull back. And we got a small spike in channel and then a pullback testing the start of the channel. Might start to go more sideways, but there's still not a credible major trend reversal set up here. The bulls need to get a trend line break all over again. You can see the market's going. We went sideways at this target, but there was not enough buying for a major reversal. So here's the next target. 66, we came close. But now maybe we have a couple of legs down and we need a correction. But is there anything to buy in here? Not really. There's been one or two bull bars in the past almost 15 or 20 bars, and that's really not great buying pressure. And when there's no reason to buy, that means it's also okay to hold on to shorts. So moving along, here's a bear breakout on 73, 74. And maybe we're testing another measuring gap, maybe this sort of trading range or bear channel, measured move down. Now 74, now we're within the final 10 bars of the day. 74, 11-point bar. 55 was less than 8 points. So 74 is one of the biggest bars of the day, occurring late in a bear trend and also late in the day. And it's common to get a rally at the end of a bear trend day because of institutions taking profits on their shorts. So we're getting late in the day, we're getting a possible, this is either a measuring gap or an exhaustion gap. We don't know, but we know that we're late in a trend. This is a bigger bar. We've had a lot of dojis and sideways through here. Maybe it's a final flag. And then the follow through, reversal bar closing above its midpoint, and then another reversal bar closing below its midpoint. So sell climax, pullback, sell climax, pullback. So we may pull back, and the first target is the start of this exhaustion gap. But if we do get here, probably sellers above. And then you can see 78 vacuumed up right to that price. It's a good looking bull bar, but probably resistance. We're right at the moving average as well. We went a little bit higher, but then found sellers. So for stop order trades today, I thought it was reasonable to sell below bar 4, at least for a scalp at that point. You don't know it's a bear trend day, but you do know there's no reason to buy. It's a decent signal bar, and it's a 4-bar micro channel after a gap down. And then through here, the low 2 below 26, reasonable stop order sell. There's another lower high double top below 35 you could sell. And the market's always in short all day today. So realistically, you can sell on a stop order below any bar, closing below its midpoint. And if you exit above a bull bar like 19 or 33, you just sell again below a bear bar like 35. So now we have a low 2, 48. That was reasonable to sell. 54, you could sell. Low 1, 56, you could sell. Low 1, 62. But late in the day, I don't know, maybe you sell 73, but this is looking more like profit taking, at least in my opinion, late in a trend, and we're getting a good looking breakout with bad follow through. So traders probably going to start to take profits down here, and aggressive bulls will start buying. But it's also late in the day, and if you're not in any position, it might be better to just leave it alone. And of course, today was a bear trend day. You can call it a small pullback bear trend. So where do we go tomorrow? So like I said in the beginning of the video, we're in a trading range, big down, big up. Market rallied, we're going sideways. Now we have an expanding triangle, the biggest bear bar, the first close below the moving average in many bars. I think the expectation for tomorrow is disappointment for the bears. The bears are hoping we just collapse and fall for a measured move of this trading range and get follow through tomorrow, another trend day. But I think more likely the bears will be disappointed even if we do go below today's low. There may be buyers some distance below and pick a place to the left. Support here. I don't think we'll get all the way down here, but let's see. I don't know, maybe the high of August 14th. But the point is, I think the downside is limited, and I think the market is overall in a trading range. And disappointment is the hallmark of trading ranges. So I think trend bars, breakout attempts, are typically going to be followed by disappointment. Just look at the trend bars through here. A lot of them had bad follow through, with the exception here. And I wanted to mention just one other thing before I wrap up this video. If anyone happens to be struggling right now, this is just a reminder that you have to be kind to yourself. And it's like Al said, you have to be your own cheerleader. And what you're learning and what you're doing here is considered by many people to be extremely difficult and even impossible. So if people don't believe it's possible, then they won't believe in you. And so it's up to you to believe in you and to root for yourself. But if you do have external support, you should consider yourself to be very fortunate. But the reality is you're typically not going to have a lot of support. Trading it's get rich slow, and it takes patience and persistence. And you're going to have painful experiences, losing trades, bad trading days, and you're going to make mistakes along the way. But all of the painful experiences and the losing trades, the bad days, every mistake is a potential lesson if you just examine them. If you find something that makes you uncomfortable, or that you struggle with, or that you can't explain simply, and you stare hard at it and meditate on it, you'll start to find answers. And that discomfort is just an indication of a learning opportunity. So in other words, there's potential for growth. And failure can be a very positive part of your life, because you can't have failure without success, or success without failure. And it doesn't have to be painful. Once you begin to learn how to effectively make mistakes, reflect, and improve, you start to crave mistakes, kind of like a runner's high. And on this topic, Ali does a great job of explaining ideas related to this in his article on the Brooks Trading Course website, and I'll put a link to that article in the description of this video. And I digress here. I think it's worth saying I've been taking cold showers for 4 or 5 months now, and even still I sometimes will stall and I'll struggle to get into the shower, even though I know once I'm in the water I'll adapt and I'll be fine. But my mind makes up these stories like it's so difficult, it's painful, it's uncomfortable. But the reality is it only feels uncomfortable for a couple of seconds at this point before my body realizes and remembers that it's fine in the cold water and there's no need to be tense. And to even shift my thinking from the water feels cold to it isn't cold, it's just what it feels like. You have the ability to control your mind, your thoughts, your ideas, perspectives, And you can remind yourself that, in this case, in this example, you're safe in the shower and you're actually lucky and fortunate to have running water. And once you start thinking that way, the water doesn't seem to feel cold anymore. So why am I saying all of this? How does it relate to trading? Well, it applies to everything, really. And that's why I take cold showers. I know there are health benefits, and I don't even really know them. Like, it boosts your immune system, improves circulation. But the real reason I do it is for the metaphorical reasons, and as sort of a reminder to challenge myself every day to do my best. But specifically for this example, the point I'm getting at is to just do it. And so when you find something you struggle with, that's your indication of what you need to be studying. So in essence, just do it. Find something you struggle with and attack it, and don't overthink it. And that's why it's so hard as a beginner in any endeavor. You're standing at the bottom of a mountain and you can't see the top. And there's a lot to learn. Everything's a weakness. It can be overwhelming and you don't even know where to begin. But the key is to just begin. That's the key point that I'm getting at. Rip the Band-Aid off and just, as Al says, jump off the high dive. Get into the cold shower. Don't even think about it, because it's so easy to overthink and lose sight of the goal. And if it's overwhelming, then it can probably get broken down into smaller pieces. So I would also say breaking things down into baby steps is also key. And getting started is always the hardest part. It's basically, it's the law of inertia. Change is always hard. Getting into the cold shower is always hard. You might come into trading with beliefs that are counterproductive and might even inhibit your ability to learn. There's kind of a mindset shift that goes on in the process. Especially, I know for myself, my perspective and mindset on trading from day 1 to year 5 have shifted dramatically. I came into it hardly believing it was possible that someone could look at a chart and understand what's going on every tick of every bar. But there was something about Al's books and videos that convinced me that it was possible. Plus, I was also 18 or 19 at the time. I was arrogant and naive, thinking I could figure it out in 1 or 2 years, even though it took Al, who is an incredibly smart and accomplished individual, 10 years. And I know, granted, he didn't have the material and resources we have, thanks to him. But still, I came into it thinking this is, get rich quick. And I found the more I studied, the more I believed it was possible. But the problem I had was basically I wanted the leaves before I even got the roots, so to speak. You only need to believe something until you understand it. And then you don't need to believe anymore. And the way I see it, belief eventually gets replaced with faith. But faith can only be achieved through, they say 10,000 hours of meaningful experience. And so the point is, you can read Al's material, listen to all his videos, and memorize everything, but memorizing the information does you no good. You won't truly believe it until you discover it for yourself. So when Al talks about probabilities, for example, you should challenge him, do a market study, try to prove him wrong and see what you end up with. And I know I got off track there, but I just had a few things on my mind that I wanted to share. All right. Thanks everybody for watching. I hope everyone has a good night.